the stock is down rather sharply this morning, in part because of disappointment about the reported quarter, perhaps as well continued concern that you voiced about inflation and supply chain. So give me the big picture here. Talk to your investors. Are they correct in selling the stock this morning based on the numbers that you put out?
David, good to be with you, gentlemen. A pleasure. I think what we shared this morning with investors, David, is that we had a strong bottom line finish to 2021. Operating margins up over 200 basis points in the quarter, 400 for the year. We saw a strong cash flow finish in the fourth quarter, $3.7 billion overall. And as we look at it operationally for the year, we came in at $5.8 billion. And that's where a lot of investors were frankly focused during the course of our call, because that's the best mark that I know to measure our underlying operating performance and the strength and the potential across our portfolio. When you couple that with the updated debt reduction, now $87 billion over the last 3 years in the wake of the AerCap GCAS merger, which we closed in the fourth quarter, we're really positioned, I think, to move forward. You saw the announcement 77 days ago with respect to the spins.
Yes.
But that debt reduction also carried with it an opportunity to simplify our financials. So we go from 3-column reporting today to single column. I think that's going to make GE's performance and its potential far more accessible, David, to investors. But admittedly, there's a little bit of noise in taking people through that transition today. So we're hard at that. But I think the feedback we've gotten relative to the program that we've been on, and certainly in the announcement with respect to setting up these independent industry leaders, continues to be strong. And as we look forward, we have a lot of conviction about what we're doing here.
Yeah, well, listen, you've got a lot of transitions to come, obviously, over the next 2 years with the split that we discussed a couple of months back when it was announced. Let's talk about this year, though, because you did cite inflation and supply chain. Inflation more in one part of your business, namely, it would appear onshore wind and the grid, and supply chain more acute in healthcare. Larry, explain both the impact of inflation on one side and the supply chain on the other.
David, when we talk about supply chain, we're really talking about availability of material and labor, be it in our own shops or from our suppliers around the world. We certainly saw, I think, what many, many companies have seen through the course of 2021 with respect to shortages and extended lead times. That was most acute for us in healthcare, particularly given the electronic and plastics nature of much of what we buy. We saw in the second half alone probably 8 to 9 points of core revenue growth fall into 22 because we couldn't ship orders that we had in hand. We're working through that. We saw that in the fourth quarter to a lesser degree in other businesses. We hope that we see that clear in the second half in healthcare and are working hard to control and effective as much of that as we can. Price cost certainly was a pressure for us in 21 and will be in 22 as well. That was widespread. We feel steel most particularly in renewables for sure. But again, I wouldn't focus on any one commodity. I think we're seeing what so many are. It's incumbent upon us to take the cost actions that we have to mitigate that as much as we can and push price where we can as well smartly. And I think we've saw in the fourth quarter some progress in that regard.